Hello class, what I'd like to do for week 3 is take a few minutes, probably a long few minutes, to kind of go over problem 813 with you. We may not work through the whole thing. I'll try to get as much as I can out there for you. I think chapter 8 in this particular problem, this is 813 once again, is asking you basically to complete the journal entries and to provide government-wide financial statements. Now, the important concept to get here is that the governmental funds have operated on a modified accrual basis. So what you're trying to do is convert the governmental funds to the accrual basis for the government-wide financial statements. Those funds, such as the enterprise funds that are already on the accrual basis, do not require any worksheet adjusting entries, and fiduciary funds are not included. But let's go ahead and get started with doing some of our journal entries that we have. As we get started on our journal entries, first thing we want to know is you're going to have some major areas of focus. One is going to be dealing with your capital assets, because you originally put them in the governmental funds as governmental expenditures. Now you have to book them as physical capital assets in the financial statements. You will also have to do similar thing for long-term debt, because any expenditures on long-term debt were booked that way. Now you're going to have to book the long-term debt. You have to make any adjustments for deferrals, any transfer ins or transfer outs. You'll have to negate the effect of those, and then anything that's related to an internal service fund, you'll need to set that up. So we'll go ahead and make sure we at least get the journal entries, because I think if you can get those in, then you can make work from there, and then maybe I'll show you a few totals. Alright, so the first thing we're going to do is it gave us some information in your book on the capital assets. Now in this particular problem, you actually had to pull up the Excel spreadsheet like you see here to get the fund basis statements. The journal entries are under the second tab, where we'll go ahead and list our capital assets. Alright, these are net that we have for the beginning of the year are 7,752,000. So we're booking those on as assets. We are going to credit our net position the beginning of the year. Because that's going to state what our net assets in the capital assets are as of the beginning of the year. Okay, the next entry we've got to do is we've got to record our actual capital assets. So we're going to list on our capital assets. These were actually where we had our capital expenditures. So if you were to go back to your fund basis financial statements and you looked at your capital outlays, I'll show you where right here, the 616,600 capital outlays, those are what we're going to list as capital assets for the current year. The 7,752,000 up here were everything up to the prior year. Okay, and we're going to remove the capital outlay as an expenditure. Okay, the third thing we've got to do is we've got to record the depreciation expense. When we were booking the capital expenditures in the governmental funds, the emphasis was on a current period focus. So what we're trying to do now is, because we're actually booking them in the governmental-wide financial statements, where they're on the accrual basis, we're trying to go ahead and recognize our periodic depreciation expense just like you would for a normal business. So the amount given to you for that was $315,000. That was given to you in the problem in the book. And we are going to actually credit the capital assets net. In a typical business arrangement, you would be crediting accumulated depreciation related to those capital assets. Okay. Now let's look at B, where we're dealing with our long-term debt adjusting entries. We have nothing to do at the beginning because there was no beginning long-term debt. So we don't have to make an entry for that like we had to do in A. What we have to do now is we have to really reinstate our bonds payable and our bonds premium. So if we go back to our fund basis financial statements, okay, first you're going to see, and we're going to use this in a minute, in our debt service funds, you're going to see a principal payment, and you're also going to see, if we go on down to the position right here, okay, working back through here, we'll find the proceeds of the bonds, $700,000, premium on the bonds, $15,000, all part of the debt service fund. So we can find that under other financing sources. We also see the payment on principal. So let's go and record that. Proceeds, we want to take off the proceeds account from the sale of bonds because now we're actually going to record the bonds payable and the bond premium. And we're going to do the proceeds from bond premium. Okay, now we're going to go ahead and state and go ahead and put on the bonds payable. Create our liability for $700,000. Oops, one more zero. Let's try that again. And our bond premium. Okay, now what we want to do is we also want to record the principal payment. So we're going to actually debit the bonds payable for $17,500, and we're going to credit the expenditure principal on bonds. We pick that off of the fund basis financial statements. I'll flip you over that in just a second. Let's go over here, and you'll see the $17,500 right there. Okay. We also want to record, it gave us a figure of $1,500 for amortization. So we're going to amortize some of the bond premium on bonds payable. And it gave us the amount of $1,500, and the offset to that would be interest expense, $1,500. Okay. The only thing we have left to do is, because it pays interest on this bonds on April and October, we have interest from October 1st to December 31st. So we do have to accrue that interest expense. Okay, interest expense, and we're going to credit our interest payable. Okay, and our calculation for that will be, let's go ahead and put that down here, 700,000 minus the 17,500, which was a reduction in our principal payment, times our interest rate of 6%, okay, times 3 months divided by 12. Okay. So when you calculate that out, you should round it up to about $10,238, and that would be your interest payment. Okay. So now let's look at what we have for deferred property taxes. It gave you some information on that book, in the book. So we're going to make an entry for deferred property taxes. Let's try to get that. So let's do it on that line. Let's go to outline. Setting up that way, it is. deferred property taxes. Do that for 19,150. Forcing it into a credit. Let's go ahead and okay. And we'll do a property tax revenue. Gave us the information on this in the actual chapter about the property taxes from the prior year. Don't worry about this. I think it's just looking for some formatting, so don't worry about the formatting. Then we're going to also show the property tax revenue. So I'll try to get some of these numbers down here for you. And we've got to net position, beginning of the year. Okay, real quickly, the 19,150, just let me show you. If you go switch over to the fund basis financial statements, you'll see deferred property taxes in the general fund as a liability at the end of the year. So we want to show that as we're a GASB accrual adjustment. So we're debiting that liability and bringing that in as revenue. And then we're also offsetting the net position at the beginning of the year for the prior year. Okay. So let's go to D. Let's do our transfers in. Since transfers in are like revenue, we're going to debit them, and transfers out are like expenditures, we're going to credit them. If we go to our fund basis financial statements, we should be able to find our transfers in and transfers out. There's your 53,500. There's your transfer in, and then these two together here are your transfers out. So we are going to be eliminating those interfund transfers. So that's what you're doing in D. Okay. And then in E, what we're going to be doing is we're going to be bringing in the information on the internal service fund. So if you go to the fund basis financial statements, you have to go way at the bottom. Okay, a little too far. You'll notice right here that I have the statement of revenues expenditures for the enterprise fund and the internal fund. And then if you go over a little bit more, you'll see that as I move across, excuse me, you have the net statement of net position also. Okay, so let's go back to our journal entries. What we're going to be doing is we're going to be bringing over these amounts. Okay. Okay, so what I've done here is I went ahead and expanded the screenshot, so hopefully you could see this. The internal service fund, you'll see right here, it's cash of $12,003, due from others $19,800, $7,500. What we're going to do is we're going to be listing the capital assets of $19,500. We're going to list all those assets, and we're going to list all the liabilities, and we're actually going to create those into the combined government-wide financial statements. So let's go ahead. This one will be a kind of long one. From other funds. Like I said, the journal entries are key, because if you don't get these journal entries, then you're going to struggle with getting the rest of it. So I'd rather make sure I go ahead and get that done for each of you. Now we're going to do the accounts payable. We're going to list our liabilities, and this is all coming off of what you saw earlier. Wages payable. some of my typing here at class. I'm trying to do this quickly to not keep you waiting. These are all my liabilities, both long-term and short-term. Advance from the enterprise fund. You remember the enterprise fund does not require any adjustments. It's already on the accrual basis. And then the net position here, I like to think of the net position as equivalent to the fund balance that you got used to with your governmental funds. That's your net position. Okay. And you'll see that figure is 27,780. If you switch back to your fund basis financial statements for the internal service fund, you'll see that 27,780. So we know that we have balanced our entry. Okay. Now what we have to do is anything for general government expenditures, we have to take those in consideration and eliminate those general governmental expenditures. So we're just going to be breaking those out. So let's kind of flip you back and let's go ahead and do that. And then the last thing that you have is the interest expense that you have. You have to record that, and we'll go pick up these in just a minute. I'll show you where you found these on the fund basis financial statements. Okay, let's switch over to the fund basis financial statements. You'll see the general government expenditures that we have, and you'll see the interest expense here, and then the 3,180 there, okay, which had to do with our net position in the fund. Okay, once you have all these entries, this worksheet that you see over here, the start of, let's go up to the top. It says enter credits as negatives, debits as positive. That is where you will actually be recording your individual elimination entry. Alright, once you've keyed in all your journal entries and you've into the worksheet and you've got your adjusted balances, now you can go to your financial statements. Notice this adjustment column. You should be using this for all your adjusting entries on A through D. Then your entry E, where you're establishing the internal service fund into the books for the government-wide financial statements, you'll use the internal service fund debit and credit columns to do that, and together you'll create your financial statements. I'm just going to show you a quick recap because I don't want this video to be too long. Basically, once you get this through, you should be able to go back to the worksheet over here that you created under tab 2 and pull the amounts for the various categories. The statement of activities is what you should prepare first. I'm giving you kind of a screenshot of it so that you have it here to use some check figures. You should be able to pull these, like I said, off of the journal entries and the information that you already gathered. The only thing I did want to make a note to you as you work on it is when you get to the net position, you'll notice it's restricted and unrestricted, and the net investment in capital assets. The restricted amount here of $980 is going to consist of the permanent fund principal of $500,000. So if we kind of go back here, you'll see the permanent fund principal, $500,000, and the $480 of restricted in the capital projects fund. That gives you your $980. The net investment here in capital assets is going to be this total capital assets here minus the bonds payable and the premium on the bonds sold. That will give you your net investment in capital assets. Then unrestricted becomes the default. This total net position down here of $8,549,000 540 is nothing more than taking the total assets minus the total liabilities, as you see right there. That's your 8,549,540. So that's how you break it out. Over here, the 55,000 and the 23,650 in the business type activities, you're going to get these numbers for the net investment and capital assets and the unrestricted. Here again is your plug from your fund-based financial statements for your enterprise fund. So if you go to your fund-based financial statements, you'll see this 55,000 here, capital assets in the 23,650. That's what we're using for these two totals there. Hope this helps explain this problem. If you have any questions, be sure to send me an email. Thank you.